Hello guys, welcome again. Today I'm going to do a stock evaluation sheet or a stock control card. Remember, in businesses they use stock control for every stock item unit. So this is also used for maybe to reconcile how many stock units are there in the business, how many quantities are left in a business, and what is the value of those units that are left in a business. This topic is for computer practice. It's for CFSN 5, and it's also for cost and management N 5. So I'm going to illustrate how you capture it on a spreadsheet. From some requests, I decided to do this one. Okay. Firstly, you need to make sure that your table is your spreadsheet it's laid out properly as it's gonna be given to you on the question paper. And then you have to also look at which method you need to record stock on. For example, the the pricing that you have to use is the average price method. The costing method is very important because it is the it is based on the policy of the business on how you record your stock that is on hand or that is in the warehouse. So we got in this activity we're gonna use the average price method. When you get into this question, it is very important for you to look how the layout that is given to you looks like, because some students are used to one layout of the table. For example, this one they've got units on the left, which means the left controls all the units, and the right controls all the costs, the total cost of the unit that are on the left. The middle controls the middle controls the pricing. So sometimes the layout will look different. Do not practice one method. Practice all the layout and templates so that you are ready for the examination. So one of the major things that is important is this part here. When there is a movement of stock, how do we average the price? That is the only thing that students get confused on how do we average the stock. So that's what we're going to focus on for today. Okay, let us start with our activity. Let us complete the spreadsheet. You're gonna be given a list of transactions that are given to you for the question paper. For example, the first transaction this one says no stock on hand on the 1st of January. Now, we are doing stock valuation for January. Let me just put it here so that we know which month we're doing it for. Let's say it's January 2020. So they say there's no stock on hand. So it means there was no opening stock on hand. There was no opening balance on quantities, and then the next transaction there, it says, if I put it on bold and increase it, it says on the 1st of January 2020, they bought 50 bales of oat bay at 1,000 rand each. So you've got the quantity, you got the cost price. When you buy, you don't control the price. The price comes from the supplier. So you have to record the cost at which you bought the stock for, especially if it's the first transaction. Before you can average, you have to first have the first cost price. So when we buy, it is purchases. Then we're going to put the quantity there. Our quantity is 50. And then there's nothing here. There's nothing here. And then we must post, because there's no sales on the same date, we have to post the 50 units on hand. The 50 units is get posted. It is our balance that is sitting here at the moment. Oh, let me not forget, put the date. The date is very important. 01/01 January. And then we put our units that we purchased, 50 rand, and we put the price. Our price, do not type in the R sign, just put 1000. You're going to do currency formatting later. And then what you do on the left, you're going to do on the right. On the purchases, we have 50 units. Now you have to ask yourself a question. What is the total cost price of the 50 units that we purchased? That's where you do equal sign, then you say 50 units multiplied by 1,000 rand, which is our cost price. So it's 50,000. And then when you go to the balance, you can just press equal sign and you select that amount because it's the only one day. And then it's 50,000. You post it to the balances. On hand, it's balances. You are done with the first transaction. Moving on to the next transaction. The next transaction happens on the 15th of January. 15th of January. What happened on the 15th of January? We sold 40 bales. So we put the price, the date, 15/01. Then you tap. We are not buying, we are selling. So it's going to be 40 units. And then before we jump to price and before we go to the cost price, we need to balance the left. You balance the left before you go to price. Then you come to the right and you balance the right. You balance the left there. So now, because we are selling 40 units, we had 50. We have to reduce our stock. We are selling this 40 from this current 50. So it's going to be 50 units minus 40 units. Then you are left with 10. Now we come to when you do average method, every time you do transact, you check whether you need to average first or there's no averaging. Every time you sell, remember in the control of stock, actually we don't use the word sales because normally is that we took stock for sales, but we record everything at the cost price. Everything is cost price. There's no selling price. It's not the selling price, it's the cost price. So now we are issuing 40 units for sales, maybe to the shop floor, at which cost price? At the same cost price that is currently in the warehouse. The cost price that is in the warehouse is the same as is this one of 1,000. We bring it down. When we sell, we bring down the cost price because we are using the warehouse cost price. Now we move to the costing of the unit, the movement of stock. There was a movement, there's also a movement. We sold and we have a balance of 10. Now we must record this 10, 40 and 10 on the cost price section. On the cost price section, on the sales, we send this stock to the shop floor for sales at the cost price of 1,000. So we're gonna do equal sign, then we go to our 40, then we multiply the 40 with what? The cost price. It becomes what? It becomes 40,000. Then to balance, you can balance by doing 10 times 1,000, or you just do equal sign, balance on hand minus sales. Balance on hand minus sales. It's going to still give you the same answer. Whether you do it this way or this way, the answer will remain the same. Then we move to you close the whole transaction throughout. Now we move to the next transaction, and the next transaction is going to be on the 18th. If I move them up, on the 18th, what happened? Let's see what happened on the 18th. On the 18th, I put the date, 18 January 01, tap. What happened? We bought 300 bales. Check this one here, which is very important. Check this, which is very, very important. We've got the selling price there. No, actually we No, I wanted to illustrate this one. I want to illustrate this one. On the first transaction, we had a selling price, but we didn't use it here. Why? Selling, the warehouse got nothing to do with selling prices. It's got everything to do with the cost prices of stock that is in the warehouse. Even if at the floor they tell us that they sold it at 3,000 rand, it's got nothing to do with us in the warehouse. So this document is an activity that is happening in the warehouse. Please note that. It's very, very important to know that, because some students get confused and they take this figure and they use it here and then they lose all their marks. If you use it at the top there, all your answers going down are going to be wrong. So ignore the selling price. Every time you sell, ignore the selling price. Thank you. So let us move to the next one. On the next one here, we are buying 300 units. Okay, let us put the 300 units in. It's on the 18th, purchases of 300 units tab. Remember, finish what on the left before you go to the middle or to the right. So every time you buy on a weighted average method, you combine your stock. On FIFO and LIFO, every stock remain in their own different storages or cages. In here, when stock arrive in a warehouse, we combine it. So what's gonna happen? It means we're gonna combine this stock and whatever is in there so that we get the new balance there. And then what will be the new balance? We're gonna do equal sign. We're gonna do in here, we're gonna put equal sign, and we're gonna say the stock that is in the warehouse plus the stock that we are buying now give us what? 310 units. 310 units, they come at the cost price of 1,200. So cost price is something that you're interested in, because it now gonna change the cost price of the warehouse, because we are averaging. We've been coming with 1,000, now we've got 1,200. So when you do weighted average method, every time you buy, you have to average the price. You have to average the price. For you to average the price, it means you do your left side, your right side, then you come to the middle. That's the procedure you're gonna follow. Go to the left, finish the right, then come to the middle. That's the sequence that you're gonna use to record, so that you can average the price properly. So how we gonna do that? Then we're gonna move to the right. Now we're gonna move to the right. We're gonna say, okay, 300 units we are buying. We go straight to the right on purchases and say equal sign. The 300 units multiply by what? Multiply by what? Multiply by the 1,200 cost price that you got from the supplier. 1,200 units. Then you press 1,200 rand is 1,200 rand is the cost price. Press enter. Because we are buying, what you do on the purchase, you do on the purchase. So it must go to the correct column. So now we've recorded the amount. Remember, we've got some balance. We got the balance. Now you close off the whole right section. You're gonna do the balance plus the new stock, cost of stock that we just bought, enter. Then you got the new balance. You are left with the middle. In the middle, you do equal sign, cost of stock on hand, divide by cost of stock on hand, divide by units. Divide by units. And then you press enter. That's how you average the price. It's gonna give you a new warehouse cost price. Make sure that you reduce the decimals, because since some students with long decimals, the question paper is going to tell you whether you use to integers or remove all decimals or not. So I'm going to remove the decimals for the purpose of neatness on this one. Now that's how you average the price. It's the cost. Let me not hide everything. It is the cost divided by the units. You get the price. That's how it goes. Because I've seen weighted average method confusing a lot of students. Okay, now that we are done with that one, we're moving to the last transaction. We're gonna move to the last transaction. I'm just gonna remove this. The next transaction here is on the 29th. On the 29th of 01, what happened? Sold 280 bale of okay. So when we sell, remember when you sell, you don't have to stress about averaging because you use the warehouse price. So when you sell, we're gonna sell 280, and then you always close your side. So opening the balance on hand plus the stock that we just purchased, that we just sold, because we are selling. When we sell, we subtract. When we sell, we subtract. It's gonna be stock on hand minus whatever we are selling, which is 280. Enter, and you are left with 30 units. And then when we sell, we don't change anything. You bring down whatever the cost that is in the warehouse. I normally say press equal sign and click on that price and press enter. It's going to come down, neat as it is. If you try to type it, sometimes you type it wrong. So just bring it down using that method. Now we are done with the left and the middle. When we sell, we do the left and the middle. When we buy, we do the left, the right, then we go to the middle. Now we have to close the balance this side. Then because we were selling, we have to come to the sales column and do equal sign and say we are selling 280 units at what cost price? At 1,994. Enter. And then we close it off by equal sign balance minus sales. Balance minus sales. Then we get the balance of stock on hand. The balance of stock on hand. Then I'm going to reduce the decimals for neatness. So that's what is left for you there. Sometimes your question paper want totals, sometimes it doesn't want totals. But if it want totals, you can just do sum. And then you go to auto sum. And then you come here. And then you allow your cursor to have a cross. And then you go across up to there. Then you got totals for the quantities. Then you do the same here. You highlight downwards. And you use auto sum. Click there. Allow your cursor to be across, drag to the right, then you got totals. And then remove decimals. If they want currency, you're going to highlight the money columns only, which means the price and the cost side, the cost price. And then you're going to look for currency, and you're going to look for English, South African rand. Then you have it there. And I'm going to reduce the decimals because it tells me that my space is not enough because I've put the currency. When you see the hashtags, you must know your space is not enough. Just adjust it a little bit. And then if they say they don't want decimals, remove all the decimals. Then you're done. You're done with your this question. If you have your layout correctly and then your pricing correctly, it can give you 30 marks in the exam. It's actually 30 marks in the examination. So it's not a question to ignore. It's very important. It's not a question to ignore. Please do your layout correctly, do your table correctly, put your horizontal and vertical lines, bold your headings, do your currency, remove your decimals if they say so, because these are additional marks. You can actually collect 6 months before you can even answer anything, and then the rest of the question can give you about 30 marks. Okay, thanks for watching. Please share and then subscribe, share with other students, please. See you in the next video. Thank you. Bye bye.